We've got the continued showdown of AIG versus Bank of America. Berkshire-Hathaway makes some acquisitions. And here at the Motley Fool, it is Bring Your Kids to Work Day. You're in the right place, folks, because this is where the money is. So, David, in this showdown between Bank of America and AIG, I say Bank of America, AIG, the group that AIG is with also includes some other investors. But this is over the $8.5 billion settlement that the Bank of New York Mellon, as a trustee for countrywide mortgage loans.
Back in 2011.
Right, way back when. They came to this settlement with Bank of America to settle these allegations. And now it's being challenged by AIG and a small group of other folks. My question to you is that as we look at this, and AIG basically wants to go back to the table, renegotiate everything. AIG is the holdout. We've got BlackRock, we've got PIMCO, Freddie Mac, MetLife, the Federal Reserve Bank of New York, all supporting this deal. Why is AIG the holdout here?
I guess the simple answer would be they want more money. And when you look at the situation, it's why are they the ones holding out? That's your question. I'm not really sure. I mean, you'd have to ask AIG management, what's their strategy around here? But I'm an AIG shareholder, and I look at it from their perspective. They've obviously run the numbers, and they say this is the probability that we get more. This is the legal cost of this ongoing process of trying to get more, having more legal counsel. There's a cost associated to this every day that it's not officially stamped approved. So I guess they've run the numbers and they think maybe there's a probability. I guess they think they have nothing to lose. What do you think?
The first time you said obviously they've run the numbers. Now, I wouldn't be so quick to make that assumption. Maybe they haven't. I think a big part of this is probably, just like you said, that they want to get more money. They simultaneously, AIG that is, has another suit outstanding against Bank of America, a fraud suit for about $10 billion over alleged misrepresentations on other securities that they sold. You know, from AIG's perspective, I can understand the want to recoup as much as they possibly can. I'm an AIG shareholder as well. I'd want to see them recoup as much as they can. But at the same time, the big story with AIG is getting refocused on core businesses. I have to wonder whether this securities litigation and the aim to collect as much as they can from crisis-era losses is going to be a distraction from trying to get back to those core businesses. So
as a shareholder, are you sitting there thinking, gosh, I wish they would just settle this. I'm tired of reading about them objecting, everyone else accepts the deal. Are you in favor of them still opposing to this? I mean, personally, you said that you would like them to just get back to the basics. I don't really mind that they're objecting it that much. What do you think? Do you wish they just got it over with?
I'm also a Bank of America shareholder. So
I guess
that colors me just a little bit. But I primarily want to see AIG focused on getting the property and casualty insurance operations where they need to be, getting the life insurance operations where they need to be. It'd be great that they could get some more out of these settlements, but I'd rather see them laser focused on the operating businesses. Moving on to a different legal issue, we've got U.S. Bank getting hit by one of the regulators. What's going on here?
Yeah, so the CFPB, the Consumer Financial Protection Bureau, they've come out and they had some issues with the way U.S. Bancorp was dealing with some of their auto practices, and in particular, how they deal with members of the military. Mm-hmm. So obviously, no one wants to mess with the members of the military. No, it was interesting. Bad. It was interesting because earlier in the week, the Department of Defense actually gave U.S. Bancorp, I think it was called the Freedom Award, for being a good steward to military members. So they didn't have to pay a fine for this. They just had to reimburse some of the fees that they charged to their customers. So I don't really see this as a big deal. I'm actually in favor of the Consumer Financial Protection Bureau. A lot of Wall Street firms kind of have some issues with it. I think it's a good thing that we're getting rid of kind of some bad practices that go on in lending at some point. So there may be some short-term pain, but I think that's, in the end, it's a good thing for lenders and banks.
Okay. And Berkshire-Hathaway going out and making some additional acquisitions. Now, I say Berkshire-Hathaway, that's the holding company. The acquisitions, one of them was Columbia Insurance buying a life insurance unit from Hartford. Mm-hmm. The other one was Oriental Trading buying a little toy company called Mindware. The point that jumps out at me at this, these are both small acquisitions. I think with Berkshire, everybody is focusing on big acquisitions, big acquisitions. I think one of the big opportunities for Berkshire now and well into the future is having all of these individual companies expanding through easy snap-on acquisitions to increase their size. Where they can do the big acquisitions, I say go ahead and do it where it makes sense. but I think there's a lot more opportunity for the smaller snap-on acquisitions.
My question for
like
you
these.
on when Berkshire makes these acquisitions, big or small, has Warren Buffett kind of earned the respect of the market that he gets the thumbs up on basically any acquisition he does now? Is there ever going to be a point where everyone comes out and says, this is just a bad acquisition from the get-go? Has he earned that respect that anything he does kind of gets a pass?
Of course not. No, not at all. I mean, look at what happened when they announced the team deal to buy Heinz. There was a lot of backlash looking at the price of that, and are they overpaying? Has Buffett lost his touch? Why are they paying this much for Heinz? Is this a bad acquisition? So I respect Buffett a lot. A lot of people respect Buffett a lot, but I don't think he gets that automatic green light and approval. For these smaller deals, it's a little bit tougher. I mean, the Mindware deal, for instance, we've got basically no financial information on that deal, or no financial information that I saw. So it's hard to say whether that's a good deal or bad deal, at least from a valuation perspective.
Okay.
You and I have been talking about buybacks this week, share buybacks, mainly within the financial space. You were looking at a couple of the financial companies, a couple of the banks that made some disastrous share buybacks.
It's not good, and it's worth noting that buybacks can be great. They can be a great thing for shareholders if they're done prudently. A lot of the times they're not done prudently. I looked back to Bank of America. Between 2006 and 2007, Bank of America spent $18 billion on share buybacks at an average price of $50 a share. It's at $12 now. So we talk about the Countrywide acquisition. That was such a bad use of capital. Look at all these losses that they've incurred.
No kidding.
They spent $18 billion on their shares that are now.
I'll still argue that Countrywide's worse.
It's still worse, but that kind of gets swept under the rug. And it wasn't just Bank of America. If we look at Citigroup, in 2006, 2007, they spent over $13 billion on share buybacks at an average price adjusted of $460. So now it's around $46. So these two banks,
I'm getting indigestion just listening to these numbers.
Crushing shareholder value when they do this, and it kind of gets swept under the rug when these share buybacks happen, and then in the long run, it's just terrible for shareholders.
Well, I think it's important to point out. However, we focus primarily on financials and banks, so it would make sense to look at these from the financial and bank perspective. But this isn't just an issue for the financial and bank companies. Valero was one of the companies that has been, in my mind, one of the worst offenders in terms of share buybacks. In 2007, they spent about $5 billion, somewhere in that range, on share buybacks, in the $70 a share range, and they took on debt in order to make some of those.
Double whammy.
Today, the shares are trading at about $35 a share. I think it's easy for shareholders to get really fired up about share buybacks. A lot of people, myself, I've done this myself, simply refer to share buybacks as a return of capital to shareholders, and it can be that. But like you said, they have to be done properly. You only want to be buying back shares. You only want to see your company buying back shares when they're at a valuation where it makes sense.
And it's hard to say right when it happens whether it's a good or bad thing, because it takes time naturally to play out whether it's a good idea, bad idea. It's not a clear cut
in terms
decision.
of how the market moves. Yes,
correct.
But at day one when they're doing it, as investors, we're always looking at a stock and saying, is this a stock that's overvalued, undervalued? Is this a reasonable price for the stock? If you're looking at the stock and saying, wow, that's a pretty rich valuation, that's not the time a company should be backing up and paying a high price to buy back a bunch of shares.
Right.
Closing out, we're at about halfway, almost exactly halfway through the year. Second half of the year, David, what is your number one bold prediction?
If we're going bold, you're not going to hold me to it, hopefully too much.
I will.
My bold prediction is regarding Annaly Capital, the mortgage REIT.
Okay.
It's been crushed recently. It's down around 10% on the year when the market's up around 13%. So it's been a big laggard. But my bold prediction is that Annaly Capital finishes the year in the green for shareholders. I think it's gonna.
What makes you think that?
I think the interest rate.
You're just guessing. You're just throwing darts at a board.
Well, it's a bold prediction. I think the interest rate concerns are a little overblown. I think if there is a management team in the mortgage REIT industry that can manage this and get through it, I think it's going to be Annaly. And when we get these next couple of earnings reports, I think it's really going to show if they really are that good of a management team. And if they are, I think the stock will finish in the green. What's your prediction?
Okay, this isn't going to make bank shareholders particularly happy, but my bold prediction is that there will be good opportunities to buy quality bank stocks in the back half of the year. And if you read between the lines, that's me saying that I think that there are a bunch of banks. I think bank stocks are going to see some weakness through the second half of the year. Maybe not continued weakness, maybe not meaning that they'll be showing losses by the end of the year, but there will be declines between here and the end of the year that will give opportunity for investors to buy quality banks. When I say that, when I'm looking at the bigger banks, I'm thinking about Wells Fargo, I'm thinking about JP Morgan, among the big four in particular. Capital One is a bank that I've been looking at a lot lately, and I'd like an opportunity to buy that at a lower price. And US Bancorp, another great bank, would love to see that at a lower price. The reason I think that this is going to happen is that the rising interest rates, I think we're going to continue to see interest rates go up. I think the pace that they've been going up, that's going to moderate. But the higher interest rate environment is going to be good for banks long term. It's not going to be good short term. There are going to be a lot of things that we're going to see on the bottom line that investors are not going to like. One of the big ones is the hit to mortgage income because the refi boom is starting to end. We're also going to see it on the balance sheet as asset valuations, bond valuations go down as interest rates go up. So I think short term, we're going to see some not so great things on the P&L for banks. And I think that's, the bright side is I think that's going to give opportunity for investors who are in for the long term.
Absolutely.
All right. Thanks for watching.